Welcome to this explainer. Today, we're diving deep into the World Economic Forum's Insight Report, Reimagining Digital ID. We're basically breaking down the absolute foundation of our future digital economy. We'll look at how identity architecture is evolving, how governance shapes the whole thing, and crucially, how we actually establish trust in a digital world. So let's get right into it.
Okay, let's dive into this number, 850 million people. According to the World Bank, and highlighted right in the WEF report, roughly 850 million people worldwide completely lack legal identification. Because they don't have an official ID, they're effectively locked out of the global economy. I mean, think about it. Without an ID, it's nearly impossible to get a formal job, access medical care, enroll in school, or even just open a basic bank account. It is a massive global crisis of exclusion.
But honestly, the status quo is fundamentally broken on both ends of the spectrum. On one side, you have the unidentified, those 850 million people left out in the cold. But on the other side, we have the hyper-surveilled. For those of us who actually do have digital identities, we're constantly trading away our privacy for convenience. Think about every single time you click Sign In With on a major tech platform. You're relying on a massive centralized system. It acts as a single point of failure, leaving all of us completely vulnerable to data breaches and surveillance.
Section 1. The Global Identity Crisis.
We're kind of trapped in this paradox of vulnerability, where the exact systems designed to prove who we are actually put our privacy and security at immense risk. The WEF report analytically points out that our current paradigm relies way too heavily on centralized registries and federated platforms. And here's the major issue with that. These systems actively encourage the overcollection of personal data. When a giant centralized bank or social media platform manages your identity, they collect, store, and just endlessly duplicate your personal info across multiple databases. It compromises your privacy by creating this massive honeypot of data for advertisers or bad actors, and it generates huge cybersecurity risks. We've all seen the headlines about millions of records being breached, right? Well, this centralized model is the root cause.
Moving on to Section 2. Enter Decentralized Identity. Now, there is a paradigm shift on the horizon, and it is incredibly exciting. This is all about taking power away from those massive centralized platforms and putting it right back into your hands. So the crucial point here is that decentralized ID, or DID, isn't just some cool new tech. It is a fundamental architectural shift. Instead of a tech giant managing your data and verifying you to a third party, a DID system uses cryptography and secure digital wallets to let multiple entities, like, say, your government or your university, issue credentials directly to you. And most importantly, it empowers you to manage that personal data yourself. It literally removes the middleman entirely from the transaction. Which leads us directly to the concept of self-sovereign identity, or SSI. I want you to just think about how your actual physical wallet works. You keep your physical driver's license and your physical health card right there in your pocket, right? Well, SSI brings that exact same logic to the digital world. You hold your verifiable digital credentials securely on your own device. And because there's no massive central database holding everyone's data all at once, this architecture actively prevents those single point of failure data breaches we were just talking about.
Section 3. The Trust Triangle.
So, how does this actually work in practice without that middleman? We're going to take the abstract cryptography from the WEF report and make it totally intuitive. Every single decentralized identity transaction involves 3 core players. First, you have the issuer. This could be a government providing an official ID or a university issuing your degree. Second, the holder. That's you managing those credentials in your secure digital wallet. And third, the verifier. This is the entity that needs to check your credentials, like a bank when you apply for a loan. The real magic here is that these 3 interact over public ledgers. That means the issuer never needs to know where, when, or with whom you're using your ID. Your university doesn't get pinged every time you show your degree to a potential employer.
Let's see how this builds out in a real-world flow. Step 1. The issuer digitally signs the credential and hands it directly to the holder. Step 2. When you need a service, you, the holder, create a cryptographic presentation of proof and hand it straight to the verifier. Step 3. The verifier simply checks that proof against a verifiable data registry, like a decentralized database, just to make sure the issuer's signature is actually valid. See what's missing there? The verifier never talks to the issuer. The data flows directly from you to the service provider.
Section 4. Zero-knowledge proofs. We are about to look at a technological leap that allows for absolute privacy while still undeniably proving an identity claim. But before I explain the tech, I want you to think about a highly relatable everyday scenario. How do you prove your age, say to enter a venue or buy an age-restricted product online, without revealing your actual birth date? Because in the physical world, when you hand over a driver's license to a bouncer, you are giving away your exact birth date, your home address, and your full legal name, all just to prove you can buy a drink. It's a massive oversharing of data.
The answer to that question is an absolute game changer for digital privacy. It's called zero-knowledge proofs, or ZKPs. As defined in the report, a ZKP is a cryptographic method that allows one party to convince another party that a specific statement is true, without revealing any of the underlying data that proves it. I know, it sounds like magic, but it's just pure, brilliant mathematics. And this brilliantly illustrates the concept of minimally necessary disclosure. With a ZKP integrated into your digital wallet, you can mathematically prove to a verifier that you are over 21. The verifier receives a cryptographically guaranteed yes, but they learn absolutely nothing else about you. No date of birth, no address, not even your name. This specific mechanism stops that dangerous default of oversharing that we basically inherited from paper-based ID systems.
Section 5. Governance and Global Inclusion. Now, let's pull back to the macro level for a second, because as incredible as this tech is, the WEF report is very clear. Technology alone only accounts for a fraction of the solution. To actually fix the global identity crisis, true interoperability requires open global standards. Proprietary walled gardens, where one single corporation owns the entire identity stack, will completely fail across international borders. If we want decentralized infrastructure to work globally, we have to rely on open standards, like those being developed by the W3C. This ensures a credential issued in one country can be seamlessly and securely verified in another, without anyone getting locked into a single tech vendor. To achieve this, the WEF outlines several strategic policy action pillars. First and foremost, we absolutely have to close that 850 million person ID gap we talked about at the very beginning. How? Well, by ensuring this tech doesn't just cater to the hyper-connected. We need to develop low and no connectivity solutions, maybe using smart cards or localized networks for marginalized populations. We also need to establish trusted, ridiculously easy-to-use digital wallets so that digital literacy isn't a barrier to entry. The ultimate goal here is avoiding digital disenfranchisement, making sure that as society moves online, we aren't leaving the most vulnerable behind. And making sure that happens requires implementing essential structural safeguards. We really have to impartially look at the risks here. For instance, what happens if someone just loses their phone? How do they recover their identity without having to rely on a centralized tech giant? And how do we handle biometrics ethically? We need robust governance and key management systems to ensure this new ecosystem doesn't accidentally create new vectors of exclusion or oppression. Honestly, the rules of the road are just as important as the cryptographic engines running under the hood. Now, what's really interesting about this quote is the core takeaway it presents. Digital ID is the core infrastructure of the future economy. Built poorly, it's our surveillance engine. Built right, it's the foundation of global privacy and digital trust. We are literally at a crossroads right now. We possess the technology, the decentralized networks, the trust triangles, the zero-knowledge proofs, to build it right. But it's going to require open standards, thoughtful governance, and a relentless commitment to global inclusion. So the question I want to leave you with today is, as this infrastructure is being built around us right now, what role will you play in demanding it leans toward privacy and trust rather than surveillance? Thank you so much for joining me for this explainer, and keep questioning our digital future.